Bitcoin and the broader cryptocurrency market has seen a large correction down to 100,000, resulting in over $900 million in 24-hour liquidations. In today's video, we are going to be discussing the significance of this short-term correction, the implications this may have on the macro charts, the short-term targets and expectations, the total cryptocurrency market cap, the altcoin market cap, and also touching on the 4-year cycle. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. By the end of today's video, you have a detailed and well-rounded understanding of not only the short term, but the macro as well. We post nothing but the facts, the data, the technical, and the structural information on this channel. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin link here, checking out our entire trading track record, or watching a 10-minute video inside the channel. You'll get access to 2 channels. The main trading channel where we post trading setups with exact entries, targets, stop losses, trade justification, and exclusive analysis, including access to a variety of group chats, from the general chat to the trading chart and education chat to the news, the help, the daily video, and community setup chat. Check it out. We'd love to have you in there. Let's jump into the content. So as we can see, guys, and as we have been expecting, Bitcoin saw that correction down to this 100 to 102,000 region. Now, we discussed in our prior videos that as a consequence of the rejection from this $106.7 to $107,000 level, we would then expect a correction all the way down sub the 200 moving average and closer to that $100,000 target. And we have seen exactly that play out, and that resulted in nearly $1 billion in 24-hour liquidations. With this short-term correction, we have unfortunately also seen the weekly chart begin to look a heap more bearish, with that deviation set up more or less confirming here with just 3 days to go, the bearish divergence beginning to become more valid, and the potential for a steeper correction on the short term and thus the macro really starting to loom much more over our heads and become much more of a reality. As always, we've been discussing this now for 2 weeks, well ahead of the curve, to make sure we are prepared, we are understanding, and we are able to adapt and react to these scenarios. Let's start on that market data. 24-hour volume, it is up 62% at 326 billion, with liquidations up a massive 340%, sitting at 963 million, with 875 million of that actually coming from long positions, with only 88 million, less than 10%, coming from the short. So we can already see over here, guys, some massive liquidations occurring as Bitcoin plummeted toward the downside over a matter of hours, really, towards that major level of liquidity. If we move over to the DXY, not too much changing over here, but I do want to put caution to the wind because we do have some major economic events coming out very shortly. Of course, tonight we have got our NFP data, we have got our unemployment rate data. This comes out in just over 12 hours. We have got our CPI data coming out on the 11th, so 5 days from now. 6 days from now, the PPI data, and nearing the end of the month on the 19th, we have got our major interest rate decision. Now, this is going to play a massive role in determining where the market will move to over the following month and a half. It's going to set the premise for directional continuations, whether that be upward or downward, as the potential to dramatically alter the short-term direction for the market. So a major event incoming. I would like to say that as we approach these news events, prepare for volatility, prepare for potential manipulation, and trade with caution. As always, you guys know I do not personally trade into news events. I wait those days out. Looking at the S&P 500 here, guys, again, Sitting where it was yesterday, we've had that attempt to crack over 6,000 now 3 times. We have failed to do that every single time. This is now a level of resistance. Therefore, corrections are very much possible while we remain under 6,000. If we break through 6,000, that is when we expect a continuation upwards. So at the moment, resistance is resistance until it's not. The short-term bias is pointing toward the downside. The macro bias is bullish, provided we remain above that horizontal support at 5,700. So worst case scenario, correction to 5,700, then a potential continuation upwards. If we lose 5,700, well, then we're going into a macro downtrend. That is it, guys. So the updates, the broader markets. Let's jump into Bitcoin. As we mentioned, we are diving very deep into the short term, discussing what the next move is for Bitcoin now, considering we have already seen a pretty large correction. Are we going lower? What are the targets? What can the buyers do to reverse the price action? What are the key levels? We'll also be discussing now the changes that have occurred on the weekly chart. Should we be taking this more seriously? Are we going to see a larger correction? What does this mean and how it is looking? And of course, we'll jump over to the 4-year cycle, why the 4-year cycle top date in October might be wrong, and we'll be discussing the total cryptocurrency and altcoin market. So before we get into all of that, make sure to go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content on a daily basis for you guys. And of course, you'll support yourself in your trading journey. Check it out. We'll play an ad and we'll get right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's go ahead and get stuck back into it. So, as we've said, and as you can see, a pretty big correction here for Bitcoin. Let's start by talking about what this means for the total cryptocurrency market and the total altcoin market, and then we'll jump over to the broader market. Let's jump on into it. So taking a look at the total cryptocurrency market cap here, we can see we have actually dropped below that major level of support at 3.19 trillion. This $3.19 trillion level is a level we've been discussing now for quite some time. We mentioned that if we were to lose 3.19 trillion, as a consequence of doing so, and in conjunction with that, we would see a drop below that weekly level on the range high, the weekly chart, and we would lose a 200 moving average. So we have actually seen that play out now, and the total cryptocurrency market cap is looking relatively bearish. On the short term, we are coming to retest that 50 EMA now, which is going to be acting as a temporary level of support. We can see the 50 EMA has acted as a pretty significant level in terms of the trajectory of the trend for quite some time. In fact, spanning back to February this year, when we broke below that, we remained underneath the 50 EMA this entire downtrend until we finally broke back above, and then we've remained above the 50 EMA until we are finally breaking back below. So essentially the first time since the 23rd of April, we are breaking back below the 50 EMA, and we've seen how historically the 50 EMA has acted as a bit of a guide for the price action in terms of the trajectory of the trend. So what we can expect here is that if we do sustain below the 50 EMA relative to what we saw the price action experience in this downtrend, we could expect the price action to remain in quite a strong downtrend in the short term while we remain underneath the 50 and underneath this diagonal downtrend, which would mean we could potentially see reversion back to the 200, which would take us at least to that $3 trillion level. So the downtrend here for the cryptocurrency market has potential to continue. It doesn't look like this is going to stop. We might see some mean reversion on the short term, which we'll discuss. There is hope for the market to reverse, but there is a chance here, a pretty good chance, we'll see this continue to bleed downwards over the next few days, provided the upcoming economic news is not bullish, right? If we get bullish news, that will fully reverse the trend most likely, and hopefully it does. But if we get bearish news or even neutral news, the trend will likely continue in its trajectory. So what are the key levels we are watching? The most important levels we are watching here on the total cryptocurrency market is now going to be that $3 trillion level, which would more or less line up with the 200 moving average over the course of the next 2 weeks, okay? If we're able to sustain above this level, it is likely Bitcoin will not drop any lower than that first higher time frame bearish target, which is sitting around that $96,000 to $98,000 region. This is going to be an ideal area for Bitcoin to reverse from. If we drop below here, we run the risk of an even steeper correction all the way back down to 86, which will result in a retest of the Gaussian channel upper band and 50 EMA. As you know, losing that results in a very large correction and potential the start of a macro downtrend. So we do need to sustain above these levels, and of course the total cryptocurrency market cap is going to act as a bit of a guide for the broader market. So overall, not looking amazing, retesting the 50. It is likely the crux of this volatile move toward the downside has ended. We've seen nearly $1 billion in liquidations. It is likely we see some mean reversion, we see some accumulation, we see some absorption, and then we see this trend continue if we see that news develop more towards the negative side. So not out of the woods, but I do think the volatile correction for now at least has faded for today. If we're looking at the altcoin market over here, guys, it is looking horrendous. And I truly mean it is looking horrendous. While we remain underneath this 830 to 840 billion level, we are really in deep water for altcoins. Now, we could see corrections to 800, we could see corrections to 760, 740, but in essence, if we remain under 840, there is not much hope for high time frame reversals. What we really want to see for altcoins is we want to see this break up again. We need to see this prior lower high. So we're looking at 858 to 850, this level right here, this orange line I'm drawing in, the prior lower high. If we are able to break through here, that is when I'll be confident for altcoins to continue up again. Until we do so, I am skeptical on altcoins, meaning some will do well, some will do poor, but the vast majority are not going to be in optimal positions until we break through this, what is 860, 858 billion dollar level. So keep your eyes on that, guys. For downward corrections, we could see as low as 800 if we do continue downwards, maybe 780 if we do continue downwards. So that is it, guys. Let's jump over to Bitcoin. So as we mentioned, a lot is happening here, not only for the short term, but more so the potential impact and I guess how the short term is playing into how this higher time frame chart is developing, and then how the high time frame chart is developing itself is quite concerning, like we've been saying for quite some time. Let's take a look at the short term first and foremost. So as you know already, and as we talked about, the rejection from that level at 106.7 to 107 was going to result in a correction to 200. If we lost to 200, we will see a correction to 102, potentially lower. That is where we're sitting right now. So as you can see, we are coming into this lowest level of support. We had a prior horizontal consolidation, represented by our two orange lines. We had our sell side liquidity represented by the retest of the 50 EMA, and that moved toward the downside. What we can see right now is we're retesting this low. So technically this is a level of support, and what we have seen thus far is a liquidity grab below that level of support, hence some mass liquidations as well as we broke below that 102 level. This is really the last line of support for Bitcoin before we run the risk of a steeper correction. Now, what do I mean by a steeper correction? We've been saying this for days now. A lot of people haven't believed us. A lot of people want to ignore it. And I say all the time, it doesn't matter what you want to see happen in the charts. I've got my own personal biases. I keep it out of my analysis. Everyone's got their own personal things they want to see happen. It's irrelevant. It doesn't matter. You have to be objective. You have to identify all the potential scenarios, and you have to be honest with how the charts are developing. Because if you don't, you are only hurting yourself. Trading isn't about how well I do compared to you. It doesn't matter how well I do compared to you. It's not about how well you do compared to the next guy. It's about you versus yourself. So if you're sitting here listening to what I'm saying and you feel like you should listen to it because it's got some facts, it's got some data proving, but you've got this internal bias conflicting you, forcing you to ignore these warnings, which are very much relevant, then you are doing nothing but hurting yourself. And that is something you have to come to terms with in trading, because it is literally you versus yourself in trading. That's why I love trading so much. It is an internal battle in your mind of you versus yourself. So look, when we have these warning signs, you have to take them seriously. You don't have to believe they're always going to play out, or you may not always need to act on them. Like I said in Telegram, I made a great post about this in Telegram yesterday, I believe. I said that failing to prepare is preparing to fail. Trading is more than your actions and what you do, but how you plan, how you analyze, and how you prepare is equally important. You won't execute every plan you make, but every plan you do make goes a long way increasing the strength of your analysis, the data you have available, and then, if required, will facilitate you to make the best decisions possible. And that is really what it comes down to when we're making these plans. So at the moment, if Bitcoin loses this support, we run the risk of entering that low historical resistance range. Now, we've already entered the low historical resistance range. You can see we entered it around 102,000. We've seen an initial reaction. And as I mentioned, if we break into that level, we would see a surge in bearish volatility. We have seen that. We have seen a surge in bearish volatility, and we have seen mass liquidations as a result. That will continue into the $98,000 to $97,000 region if we drop any lower here. So this is the last line of support. We need to hold here, otherwise we do run the risk of a steeper correction toward the downside, and that would only go to make the total market cap look worse, bring altcoins lower, and make the market for Bitcoin in the weekly look even more bearish. So we need to hold this level of support. Let's talk about this now. What can Bitcoin do to hold this support? What will it look like? And is there any hope for the buyers to reverse this trend? Let's start on that last point first. Is there any hope? The answer is yes, there is always hope. There is always a chance. Nothing in trading is certain, right? There's always a chance, but the probabilities are quite low. For us to reverse this trend, we've got 3 days exactly before we validate a deviation setup from the range high. If we validate the deviation setup from the range high, this is going to be a confirmed top for Bitcoin. Not a macro top, but it is going to be confirmed a top for Bitcoin for now, okay? Particularly with the bearish divergence developing, again, the deviation from high and the bearish engulfing candle, this will be considered a top, and we'll be expecting Bitcoin to correct lower into next levels of demand, which would be, again, represented by these lower levels at 68,000. For us to avoid all this, we need to break above 107,000. As we've mentioned before, this is the line in the sand. This is the level we need to clear to facilitate a rally back to new all-time highs. While we remain under this level, we are in deep trouble for extended corrections, which could develop further onto the macro charts. Let's zoom over to the smaller time frame charts of here. Let's go to the hour. Actually, you know what? Let's go even smaller. Let's go to something like a 15-minute chart. So as we can see, guys, on the 15-minute chart, we have seen a bounce from the liquidity level. The price action is pushing up very slightly. We're not seeing too much over here. On the 5-minute, we've seen some mean reversion back to the 50 EMA, meaning that the bearish volatility is beginning to fade away. So we're in a position here where the buyers are starting to step back in and the selling is starting to fade off. What we need to see is we need to see this price continue through. We need to start to break through these prior higher lows. We're looking at 102,000 and push back up to this 200 moving average. Otherwise, the buying pressure will just fade away and we're going to see a correction back through these lows. If we see a correction back through these lows, it is unlikely we're going to get back above even this most recent high at the 50 EMA. Before we see a steeper correction back toward the downside. So it's not looking fantastic for Bitcoin here, but let's just hypothetically say we do push back up. The highest we could potentially go over here is going to be back to this break of structure, 103,000, before we run into a stronger short-term resistance, which will then just result in a potential correction back down. So overall, it is not looking amazing for Bitcoin. We really need to see some good economic news come out to save this chart. The weekly chart, as we mentioned, looking horrendous, right? We've seen a lot of bad things happen here, but most importantly, what we're seeing is 3 days until the RSI breaks down, 62.09. We've talked about this a lot, guys. The 62.09 breakdown on the RSI. Historically, what do we see? We see upwards of a 10% correction. Now, I'm not going to show you on this chart today. I'm going to assume everyone's seen it. If you haven't seen it, go back and watch our prior videos. 8 out of the 9 times since 2014 that we have seen a weekly RSI breakdown of 62.09, we have seen corrections of negative 10% or greater for Bitcoin. Okay, assuming we see a 10% greater correction from here, we would see the price drop to 90,000. That is something we have to be very much aware of. It is potential. Now, will the macro uptrend end? The answer is not quite yet. The macro uptrend is technically in an uptrend while we remain above the Gaussian channel upper band and the 50 EMA. And this will bring us back to the 4-year cycle discussion in just 1 second. Provided we sustain above here, the potential for macro continuations are still in play. However, and I want to stress this, it is looking grim, and if I look at the 2021 top in comparison to this price action, it looks eerily similar. We've had a deviation setup confirmation, okay? We've had a bearish divergence confirmation. With the bearish divergence, we drop below the 62.09, we're dropping below the 62.09. This is what we would call a fractal. Do they always play out perfectly? The answer is no. Is it something we're going to be using to make our decisions? Not particularly, but it's a point of confluence, and we need to understand that it could occur, so we need to be aware of that. So let's take a look now at the 4-year cycle. A lot of people have asked me to talk about the 4-year cycle, and this video is going quite long, so we'll keep it nice and short. My point with the 4-year cycle is, according to the 4-year cycle, the top is expected October 6, 2025. If I break down the date ranges between specific key events, tops to bottoms, bottoms to bear market endpoints, should I say bull market start points to potential tops, and I measure those on a monthly basis using a month-to-month bar, we can see the cycles are shortening very slightly. If we look at the first cycle, we had 14 bars of downtrend, we had 16 bars of consolidation, okay, until we had the breakout into the bull market. By my definition, the bull market starts for Bitcoin when we see the breakout of the yearly resistance. That generally happens when we break the monthly baseline of the Ichimoku cloud toward the upside. Again, the monthly breakout here, the monthly breakout here, the monthly breakout here. From the monthly breakout of the baseline of the Ichimoku cloud to the next top, we have seen 19 bars, and we're going to assume 19 bars for now. The key isn't the length of the bull market. The diminishing part is what we notice is the bear market into the start of the next bull market. During that consolidation phase, we can see we had a collective 30-month period where we had the downtrend into consolidation before the next bull market started. In the next cycle, we had 28 days, 12 months of downtrend, followed by 16 months of consolidation, followed by 19 months of uptrend. In the most recent, the current, we've had 12 months of macro downtrend, followed by 14 months of consolidation, followed by the current bull market uptrend. 26, we are losing 2 months every single cycle in that downtrend to consolidation period prior to beginning of the next bull market, meaning we are speeding up. The cycles are becoming slightly faster. If we were to then extrapolate that forward into where we'd expect the top to be, the potential top of the 4-year cycle might not be October, but it actually might be in August. That means we have June, July, we're coming into August, a month and a half left until the 4-year cycle top occurs. If we then extrapolate this pattern forward, which is going to be 24 months over here, we would have a 12-month downtrend as per what we have seen historically, followed by 12 months of consolidation into the next bull market. And if we look at the bottom periods, which is going to be bull market start to bull market start, that would go 47, 54, 43, which would take us to August 2027 for the start of the next bull market, which would line up with overall expectations for macro cycles. So I do believe the current 4-year cycle top date might be out by 2 months. It might be false, and therefore we're actually closer to a potential top than what the 4-year cycle is suggesting. Now, do I make decisions based on this to trade? No, I don't. I'm just using it as a point of confluence, and I'm definitely just using it as a point of analysis. This is interesting to look at. What matters is this. What matters is this. What matters is this. The 4-year cycle, although is important, we're not using it to make actual decisions. Thank you for tuning in, guys. Have a fantastic rest of your day, and I'll catch you guys in tomorrow's video. Sorry, in Sunday's video. And we'll have an Ethereum video up on our second channel shortly. Cheers, guys. Thanks. Bye.